Gold has had an amazing rise in price over the past few months. For the first time in history, the price of an ounce of gold has now hit $4,000. If you've been holding gold like I have for years, this may feel like a long-awaited and well-earned win. That being said, this might not be the victory lap we were looking for, if I may sound quite pessimistic. Because gold doesn't just go up or down like this, and there are signs that this could be a sign of something very bad to come. Allow me to explain. First, I'll show you gold from 2014 to 2019. The price was going back and forth between support and resistance at about $1,100 an ounce and about $1,300 or $1,400 an ounce. It finally broke out around the middle of 2019, and the price of gold went up 50% in just 1 year. It reached its highest point in August 2020. Now, there are a few important things to remember about that huge change in gold. For starters, most of that move took place after the money printing began. Second, though, that move didn't start until around June 2019. Of course, that was before the repo market crisis in September 2019 and a long time before any printing or QE started in 2020. And this is the first thing you need to know about gold. It knows what will happen when monetary policy is changed. You can see that gold reached its highest point in August 2020 if you look at this image again. In August 2020, prices of goods and services had not yet started to rise. I know that was more than 5 years ago, so you may have forgotten. It wasn't until March 2021 that the CPI finally rose above 2%. It then went through the roof and reached its highest point in June 2022. But gold had already moved, and after that it started moving sideways. There were other things too, though. Even though other assets were also moving because of changes in monetary policy, gold moved before those other assets. You can see from the S&P 500 that the stock market had not even reached its previous all-time high by August 2020, but gold had already reached its highest point and been on a great run. From that point on, the S&P 500 began its huge rise that ended with a peak at the end of 2021. Once more, gold predicts what will happen as a result of monetary policy. The price of gold has gone up almost 100% since it broke out of its last holding pattern in February 2024. It has almost doubled since then, which makes me wonder what in the world gold is waiting for this time. Because the action would point to something different or worse than what happened in 2020. Don't worry, I'll get to that. But first, I need to talk about why I think gold is so good at predicting how monetary policy will be used. The main reason is that the people who decide on monetary policy are the ones who buy the most gold. The banks are to blame. Amounts of gold held as a share of foreign reserves are now higher than amounts of U.S. Treasury held as a share of foreign reserves for the first time in decades. This means that foreign central banks now hold more gold than U.S. Treasuries as a percentage of all their foreign holdings. This is the first time in decades that this has happened. There's no doubt that a big part of this is because gold prices have been going up. But we can see that central banks have been buying gold for years now, and they've been buying a lot of it. So the people who decide on monetary policy are also some of the biggest gold buyers in the world. There is also a link between big moves up in gold and easing that is coming. But there is also a link between gold and predicting how tightening will affect the market. As an example, gold hit its highest point in August 2020 and then stayed there until 2024. During that whole time, central banks were trying to fix the problems caused by their acts by making money tighter. They were tightening their balance sheets and raising interest rates at the same time. This happened before it even happened. Gold reached its highest point when people started to talk about or know that it was going to have to happen. It didn't start getting tighter in 2020. Gold moved sideways because it knew it would take a long time. Now, resources and energy commodities are one type of stock that tends to do very well after changes in gold. You can see that this copper mining ETF went up another 121% after gold hit its all-time high in August 2020. Have you heard about my plan for how to play this commodity supercycle? I'd like to invite you to a beta test for a new program I'm starting. There are only 3 days left to join the beta test as of the time this video was made. You can watch a replay of my webinar that I just did by clicking on the link in the description below. It went over more information about the new service I'm starting. If you're still on the fence, act quickly because time is running out. When many people see the price of gold right now, they think this is a good time to get out of the market. That's not true though, because Bitcoin is now at an all-time high. The S&P 500 is the highest it has ever been. The Dow is at its highest point ever. The Russell 2000 has reached a new high point. Home prices in the US are higher than they've ever been. That means there is no flight to safety from investments that are risky. On a normal flight to safety event, buyers sell risky assets like stocks and bonds in exchange for safer assets like gold. Usually, that comes with treasuries as well. If you look, you can see that the 10-year yield has gone up since the Fed cut rates. This means that bonds are being sold off right now. Right now, there isn't a normal flight to safety. Anyway, what's going on? And why do I think this is a sign of bigger problems in the economy to come? Our country is facing a huge problem with its debt, which makes us feel scared. Every major economic crisis in the last few decades has been worse than the last one, and it has always happened in a place that had already been hit hard by the last one. Long-term capital management was a small hedge fund that failed in 1998. It almost brought down the whole world's banking system. The Fed made the banks plan a bailout, so they did. After about 10 years, the great financial crisis takes place. Which person or group needs help this time? The banks that took on the last one. That's why the people had to save the banks. It's now 2020, 12 years after that. This time, taxpayers and the business as a whole are about to fail because of a lack of cash that began in 2019. To save the taxpayers, the fine print had to be written. I also know that most people didn't get that much help. Some bad checks were sent out. It was printed on a big scale, which helped the money supply grow by a lot. This time, the US government stepped up to the plate and threw itself into the economic time bomb, taking on trillions of dollars in new debt and spending at the same time. This set the country on an unstoppable path of ever-growing deficits. Even though this is a bad scenario, every government in the world has been through something similar. Now we are seeing a symphony of sovereign debt problems happening all around the world at the same time. The central banks are putting gold on hold to prepare for this. The reason for this is that the central banks know they will have to take the hit this time, because there aren't many ways to get out of a problem with a lot of debt. The first thing is economy. To balance the budget and cut taxes, the government can just decide to spend less. That would make things right. But too many people are taking advantage of you. So many people have been harmed by all the fraud that they would be upset if they stopped getting what other people have made. Because of this, frugality is thrown out the window. The next choice is to get more debt than you have. This is definitely what the present government thinks they want to do. But everything that has been done in the last year or so suggests that policy will work against growing the debt rather than for it. There are definitely things going on right now, like AI and robots, that make it possible for a huge growth spurt to happen soon. What we haven't seen yet, though, means that our third choice is to just print money to get out of debt. The central bank steps in at this point. The central government borrows interest-free money from the central bank to pay its bills and settle its debts with other people. It's not likely that this will cause hyperinflation of the US dollar, but it will almost certainly lead to a very long time of much higher inflation than most people are expecting, much higher valuations across all asset classes than most people are expecting as people move their money into assets to protect it from inflation, and also much higher interest rates for a much longer time than most people are expecting. Therefore, you can protect yourself and make money by knowing these things are coming and putting yourself in the right place. But it is unlikely that we are about to enter a time of rapid and evenly distributed growth and wealth gains. To put it another way, most people will be left behind. There will likely be bigger gaps between those who have and those who don't. The economy, markets, and social order will also likely become more unstable. Once more, click on the link below to hear my whole plan for how I'm placing myself and to be invited to a new beta test I'm starting because of what's going on right now. Do it quickly though, because the time on my beta test invite is quickly running out. Thanks for watching as always. Have a great day.